Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for August 21st, 2014. We have exactly 1, 2, 3, 4, 5, 6 trading slash business days left till the end of the month, and prior to Labor Day weekend that kicks off on September 1st. So at this juncture, this market is hitting some very powerful resistance points or overbought levels. There is no doubt in my mind that we're going to see a very sharp, quick pullback sometime between now and midweek, sometime between now and, let's say, Tuesday or so. It could be as early as Monday, where some extraneous event, whether it be Yellen or Janet Yellen or Mario Draghi disappointing the markets, or at least the market acting disappointed and trying to reset these overbought levels and reset the indicators to go ahead and attempt another high on the Dow and at least try to recapture back, looking at the chart, recapture back the 17,151 level or so that we reached back on the 17th of July. So in order for that to happen and possibly move higher or slightly higher, we could go as high, again, overshoot can always happen. We can go as high as 17,300 or even 17,400. The market needs to reload. It's almost like a slingshot. You got to pull it back in order to gain the momentum to let it go forward, right? That's exactly what happens in the market. Try to understand some of the behavioral, physical dynamics that happens in the market in order to catapult it higher. Case in point, let's look at a couple of major pullbacks. I've shown this many times and I'll show this again. This was November of 2012. This was September of 2013. January of 2014. This was as recently as August of 2014. So what happened every single time? Oh, I missed one. This big one was September of 2013. September of 2013. You can always also look at this, which was mid-June 2013. So what happened in every single instance? In every single instance, we pull back and then we catapulted forward. Pull back again, catapulted forward. In this particular case, it was the breakout did not happen. It was a triple bottom. You can see that, which lasted all the way from mid-June, all the way through mid-October. Zigzagging up and down. Great trading environment, if you want to look at it that way. And then we broke out, and then we started this run up, this acceleration phase, as I call it, which was this acceleration phase, which broke first part of August. Now what we're trying to do is we're trying to go back into that acceleration phase. Let me get these lines out of here. There's just so much stuff that I see, and I can in so little time to explain all this stuff. When we do the webinars, maybe I'll have a little bit more time, but it's just the way it is. So here we are. This was if you want to look to see how high we can go, we can pretty much go as high as 17,500. Okay, so you might want to look at that. So this is the channel we're traveling in right now. So there's no mystery when you look at charts like this, because I've shown charts from way back months ago, and pretty much everything's come to fruition. And that doesn't mean that that we knew it was going to go there. It simply is that chart-wise, it was a measured move and it happened. So here the measured move, if you want to look at it this way, is around 17,461, 17,500. Okay. Now I compared this particular pullback weeks ago I called it that this pattern symmetry was going to go back and at least take the 50% and possibly shoot higher. Well, it did the latter. It shot higher. So right now we are on top. We are very close to this these Bollinger Bands and the acceleration bands, as we can see here. So at first glance, without getting too complicated, we're touching some major resistances. Wouldn't be surprised if we pull back here, move down towards the 16, drop about 200 points and attempt another move up. So that's, that's very, very possible. We also are starting to get we also don't have a convincing crossover of the 34 over the 50. They kind of merge together if you look at it this way, okay? The lines they're kind of merged in, so they need to creep up, just the way it did here. The 34 needs to basically break higher over the 50, and this has to curl up in order for this momentum to continue. In the meantime, we could clearly see next time this type of stuff happens, you can see that when we got this oversold, and I did show this clearly. Pull up my videos from these, from April that I started my service. And you're going to see that when we start to see this type of dramatic pullback like we saw here, you're going to have a reflex bounce, which Newton's law of motion, that every action has an equal and opposite reaction. Well, if you want to look at it this way, this is pattern symmetry at its best, equal and opposite reaction, right? Fell like a monster, moved up. Okay, so this is what's going on. Now, if this is the February pattern, then we're going to move up. Let me get this out. We're going to move up a little bit more. Let me just do this. This was February, and the magnitude of the drop in technical terms was the same. So we came down, we went up, and then we go like this. So little pause here, and then we move, So it wasn't a straight line, right? It went up and then it went sideways. So if you want to do it like that, let me get this out. I will draw this. And again, this is a different way of looking at things, okay? Not this only way, but a different way of looking at things. We moved up, and then we'll kind of move sideways into. So see that? Okay, so at top of the channel, 17,500 looks like where we're going to land up going. And that could be the top in the market before we make a major pullback, which I'd love to see, where we basically come down, and this might happen in which I've been saying mid-September to the October time frame, around that time, which matches with what Mr. Tom McClellan said today on CNBC, and I'll paste his link today on the end of the day report. The man is brilliant. And the bottom line is that you're going to see a very sharp pullback sometime in the September time frame, and then from the latter part of October. And October, despite all the myth, is actually a good month overall. Okay, so we see a dramatic pullback, and then from that point we end the year towards the highs. Third year of the presidential cycle and all that stuff included. Earnings are moving at a nice clip. From what I saw last, S&P earnings have moved up by about 5%, and every single bozo analyst out there was predicting that this quarter we were going to have lower earnings. Well, that wasn't the case. The global economy, despite its lumpy growth, is still growing. The U.S. is certainly growing on all metrics. And interest rates are going to rise. And rising interest rates are good for the economy. Because the bottom line is, if you look at the history of the markets, you'll see that rising interest rates in general did not crimp economic growth. Rising interest rates with rising inflation, or runaway inflation, is what causes an issue. We don't have runaway inflation. We don't have runaway wage inflation, which is a major component of inflation. So the bottom line is, regardless of what they tell you, with oil prices at lows, with wages stagnant, you're not going to get that, in my opinion. Saying all that, this is what I see. This would be the move back down, 16,500. We'll probably move up higher from there. Let me cover the other charts.